Hello there, welcome to ChamberLIVE, brought to you today by the East Lancs Chamber of Commerce and featuring Forbes Solicitors and Pierce Chartered Accountants. The views expressed in this webinar don't necessarily represent the views of the East Lancs Chamber of Commerce, and all the facts are believed to be correct at the time of recording, which is the 17th of March 2021. Now, the changes to IR35, which are going to be implemented on the 6th of April, have been a long time coming, including a delay of a year due to coronavirus. But despite that, a lot of organisations and individuals are still unprepared or unaware of what is required of them and what they need to be doing now to get ready. Today, we're going to hear from Ben Davies. He's the Assistant Tax Manager from Pierce. He's going to discuss the tax implications of IR35 and how to prepare for those changes. Ben's been at Pierce Business Advisory and Accountancy Group for over 20 years now, working with the tax department, providing advice on the complex and ever-changing world of tax. He works with a wide range of clients across different sectors with significant experience within the property and construction sector in particular, dealing with both the UK and multinational groups. And according to the Pierce website, you'll have to ask him about this maybe in the Q&A, he's an ordained minister of the Universal Life Church, just like Joey in Friends. I'll leave that there, maybe one for the questions. Once Ben's warmed everyone up with tax, Amy will then take over. Amy Stokes is from the Forbes employment team. She's going to explain IR35, the changes in the private sector and who it impacts. Her background, she's an experienced employment solicitor, trained with Forbes and qualified in 2009 and advises across a full range of contentious and non-contentious employment matters, works with clients predominantly in the private sector, providing assistance with day-to-day HR issues, including strategic advice on disciplinary and grievance processes, sickness absence management, and performance issues, as well as restructures, transfers, mergers and acquisitions. And third on the bill, and last but by no means least, is John Pickervance, Head of Commercial at Forbes. He's going to explore some of the contractual nuances, hints and tips when engaging those consultants via a personal service contract and how you are best able to safeguard your business. John's been at Forbes since 2011. He specialises in commercial matters, heading up the commercial department along with the Forbes manufacturing and engineering sector group. And his work predominantly relates to advising on negotiating and drafting contracts governing the provision of goods and services, B2B and B2C, and also dealing with a wide range of commercial contract matters, including agency, distribution, manufacturing, consultancy, franchising, and other bespoke matters. So that's the speakers' CVs. I'm sure you'll agree we've got a great panel lined up for you. Time to hear from them, and we'll kick off with Ben. Over to you, Ben.
Hi, good morning, everybody. As Simon said, we're going to look at IR35 and how does it impact your business. So, as we said, what is IR35 and how does it impact your business? So what we're going to cover today, we're going to cover the history of IR35, the changes and who is affected, assess test, what if IR35 applies, the risks of non-compliance, contractual arrangements, intellectual property, and how to prepare. I'm going to start off today with a bit of a history to IR35 because it's actually, IR35 has been in since April 2000 in different forms and guises, and it was introduced to where you've got a personal service company, where you've got someone providing their personal service to an end client through a limited company, and effectively they were trying to avoid a lot of the tax issues and reduce the tax liability. And it actually started, the legislation was introduced because a lot of businesses were using self-employed subcontractors to save and pay as you earn and national insurance costs. And practically this afforded the businesses a flexibility to cater for a change in demand in labour, but most importantly from the revenues perspective, the workers also benefited from a reduced tax and increased expenses deductions, which the revenue don't like. So they cracked down on these cases, and where the worker was deemed to be an employee for tax purposes, the revenue collected the pay-as-you-earn and national insurance from the end client, the business for whom the work was done. However, a simple loophole soon became widely adopted in the late 90s, I think it was, whereby the subcontractors would set up a one-man band limited company and provide their services, and the anti-avoidance legislation didn't work in these cases. And the added benefit was the subcontractor could take remuneration from their own company in the form of a small salary and dividends, which resulted in a massively reduced tax liability and virtually no national insurance. So that was the reason for the introduction of IR35 back in April 2000. And this legislation introduced effectively the term the personal service company, which is a limited company that sells the work of an individual, or actually a small group of individuals, and is owned and operated by those individuals. So, for example, we've got a plumber who trades through his own limited company and is the only employee of that company. And IR35 created a deemed pay-as-you-earn charge for the personal service company.
Sorry, could I just ask you to speak up a little bit, please? It's really quiet.
Is that better?
I think so.
Yeah,
Thank
is that a bit better? Okay.
Yeah, definitely. Thank you.
Right. So IR35 created a deemed pay-as-you-earn charge for the personal service company where the worker would have been a deemed employee if they'd worked directly for the client. This effectively negates the loss of tax by HMRC and puts the worker in the same position as if the worker had been engaged directly by the end client. The issue with IR35 initially was that the legislation was mostly ignored because the rules are very subjective, they're difficult to interpret, and in fact they were so difficult that the revenue itself was losing a lot of the cases in court. It was just difficult to implement. And generally, most personal service companies have no assets to speak of. So even if they didn't operate the rules correctly, the revenue weren't able to collect the tax that was due. And to top it all off, the revenue have to open an inquiry into each subcontractor separately rather than the end client. And it's fair to say it was pretty much a disaster for the revenue. So if we go on to the next slide. So this is a general typical structure of an IR35 case. You've got an end client that pays either an agency or a personal service company for the work done by the individual worker. The next slide. So that in 2017, the off-payroll working rules were included, but they were only applicable to the public sector. And what that actually did was push the liability from the personal service company to the end client. And this had quite a few effects. The first of all was that the revenue didn't have to open as many inquiries because they could just open an inquiry into the end client and that would deal with all the subcontractors that it contracted. It also pushed the liability to the end client, and that generally was the business that held all the assets and the revenue could collect the tax. More importantly, it was the end client that was often pressuring sometimes the workers to operate through a personal service company. And if the liability was with them, the idea being that they would be less likely to do that and hopefully operate the individuals as employees, which is what the revenue would prefer, because it collects more tax. So the idea was then that they were going to extend the off-payroll working legislation to the private sector from April 20, but that was delayed for obvious reasons because of coronavirus and the pandemic. And a lot of trade bodies lobbied the revenue that it would be just too much for contractors to deal with at the time. It was actually, it's quite surprising, but the revenue have a history these days of delaying legislation. So we need to look really now at who is affected by the legislation that comes in from April. So first of all, we've got individuals who are supplying their services through an intermediary, such as a personal service company, and who would be deemed to be employed if they're engaged directly by the end client. I'm going to pass over to Amy shortly, who will explain how this is actually determined. She will go through the process of seeing whether that individual is brought under IR35. Well, next we've got the medium and large size organisations, effectively their end client, who's outside the public sector and engages with individuals through personal service companies. So this is effectively where you've got subcontractors that are operating through a limited company. Public sector organisations will also be affected by a few changes to the legislation that will look to improve the operation of the reform. And thirdly, we've got recruitment agencies and other intermediaries supplying the staff through personal service companies. There are a couple of caveats to this, of course, and that's where you've got the end user who's based wholly outside the UK with no UK base, and where we've got the worker who's engaged through an intermediary and he's wholly resident overseas, his duties are performed overseas, he will also be outside the scope of the off-payroll working rules. And where the worker is engaged through an agency or intermediary as an employee, so they will also be outside the rules. So next obvious question is, what is a medium or large enterprise? So for the IR35 legislation, we use the Companies Act definition, which is a company that has 50 employees or more, has turnover of 10.2 million or more, a gross balance sheet assets of 5.1 million or more. So if you meet two of those three tests, you will be deemed to be a medium or large enterprise. First year that you go over those limits, you're actually still treated as a small enterprise. So they give you effectively a year's grace. It gets slightly more complicated where you've got a group of companies. Because if the parent company is medium or large, then all its subsidiaries are treated as medium or large. The parent company is small, but the group as a whole is medium or large, and every company within that group is treated as being medium or large. And we also need to look at which accounts do you look at to determine the size. So,
and can you just try moving a bit closer to your mic? We're getting a bit of feedback from the audience that they're struggling to hear you. So maybe try and sit a bit closer to it. I don't know where your microphone is, but
it's just here.
Thanks.
So if the parent company is small, to determine its size, the company must first look at the accounts that are due to be filed before the tax year. So if we look at the 2021-22 tax year, for example, if we look at a company with a financial year ending 31st of March, it would use the accounts to March 20, which have a filing date of 31st of December 20. So it's effectively the accounts that need to be, the last accounts that need to be filed before the tax year ends, and that's filed with Companies House, not the Revenue, of course. So for unincorporated businesses, a separate test applies, and that is a simpler test, and the only requirement is that turnover is greater than 10.2 million. And they've got a different test for which accounts use, and that is the accounts that end at least 9 months before the beginning of the tax year. So if we look again at the 21-22 tax year, that 9-month deadline gives us the 5th of July. So a business with a June year end would use its June 20 accounts. So what does this all mean? Where an individual supplies the personal service through an intermediary and would be treated as employed if they're engaged directly by the end client, the end client must treat the personal service company as a deemed employee and deduct tax and national insurance from all payments to the personal service company under pay as you earn. And the rules apply where both services provided and payment is made on or after the 6th of April 2021. So where we've got services provided before 6th of April 21, but payments actually made after, what you should do is apportion that payment on a reasonable basis. So really you just time apportion the payment. So what do you need to do? If you're a subcontractor, you don't really need to do anything unless the end client, the person for whom you're doing the work, deems that you're within IR35. For those who actually use a subcontractor, so that's the end client or the agency, the first step is to identify any individuals who provide their personal services through a personal service company. You will also need to consider, are there any people providing services through a personal service company from an agency? And then Step 2 is to identify, step 2 is for each personal service company, you need to determine whether that individual will be treated as an employee for income tax purposes if they were to provide their services directly to the end client. I'd love you to be able to point you to a simple definition of this, but it's not an easy process. And at this point, I'm going to hand you over to Amy Stokes from Forbes, who will guide you through this process.
Good stuff. So after you've determined that the individuals who provide their services through a PSC or via an agency, as Ben mentioned, the next step is for the end client to make this determination as to their IR35 status. So how are you going to do this? Well, HMRC have developed this Check Employment Status for Tax test, which is known as the CEST test. And that's an online tool that helps you to determine a worker's employment status for tax and national insurance contribution purposes. And it gives HMRC's view of what the worker's employment status should be. HMRC will stand by the results produced by this CEST service, provided that the information is accurate and it's used in accordance with their guidance. They won't, however, stand by any results achieved through contrived arrangements that have been deliberately created or designed to get a particular outcome. They would see that as some kind of deliberate non-compliance, so then you're risking financial penalties. Where there is a subsequent material change to any of the contractual or working requirements, the information originally provided might not be any accurate anymore, so HMRC won't stand by that outcome. So you need to be running the CEST test again. We were discussing, Ben and I were discussing this, the CEST test, and it is quite a complex test with a large number of questions within there. So it is helpful in some way, but also, and whilst HMRC will take that into account and it will give you an answer one way or another, we have had some quite bizarre results from the CEST test as well. And also one of the key points really is to think about what information you need to look at what the contract that you have in place says, but also how the arrangement works in practice as well. So I'll just take you through, if we just move on to the next slide, kind of what you need if you're preparing to complete the CEST test. So there's no point just sitting down and going online and running through this test. You need to pull together the information in advance. And whilst it's the end client who will go through and look at this test, you need to have some kind of discussion with the worker, and you need to understand how they operate as well. It is important, it is vital that to be aware that HMRC will look behind a contract if it doesn't reflect what happens in practice. One of the things that John Pickervance and I always say is we can produce this wonderful contract that will be compliant with IR35 and will ensure that they fall outside of IR35, but if it doesn't reflect what's happening in practice, it's not really worth the paper that it's written on. So just make sure that it reflects the working practices. So as I mentioned, it's vital to discuss with the worker when you're doing this CEST test. It shouldn't be some kind of cloak and dagger. The worker should have might have some further information and will have information about other contracts that they're potentially working on or contracts that they've previously had with the hirer or other hirers. If you've got your contracts managers who are relatively new and aren't aware of the previous situations with this particular contractor, you'll want to involve them in those discussions. So some of the things that you'll need to look at, the right of substitution is one of the questions within that, and just to explain that, so this is where if you have a worker or a contractor who is unable to perform the duties on a particular day, can they send somebody in their place? You'll see sometimes in a contract that it says you have the right to send a substitute in these circumstances, but the key point here is this an unfettered right of substitution? So does the hirer have the right to approve that person and that substitute that you're sending before they come in? And that's part of the question. So it asks, first of all, is there the right of substitution? And secondly, has that ever been exercised? And so there are a number of different questions that relate to that. Other things that you'll need to understand the worker's responsibilities, what the current arrangements are, but also if you're entering into a new arrangement with a contractor, what the expected arrangements are to be, how, when, and where the work will be carried out, and the worker's pay, how that works in practice, how they invoice, all that kind of stuff. Entitlement to corporate benefits, there's a question about that as well. Do they have, I mean, I was doing one of these determinations with a client, and this was last year before the rules came in, and actually we had a big discussion about whether them being invited to the Christmas party was an entitlement to a benefit. You know, these are the kind of things that you don't necessarily think about. You know, it's not just, oh, well, they're not getting sick pay, or they're not getting pension, and they're not getting all this kind of stuff, but it's actually a bit more, you need to think a little bit more about that, and sometimes the questions can be quite misleading on that basis. Also, can the worker provide similar services to other engagers elsewhere during the contract, and do you need to approve that? That's some other information that you need to think about as well. And again, discuss that with the contractor, because it may well be that actually they're working on a number of different contracts that you're not aware of, which is a strong determination of the status there. So if we just move on again, Simon. Some of the key CEST questions I just wanted to take you through. They kind of split into tranches, these different questions. So I mentioned about substitution in there. Another point just to make on that: who's responsible for paying the substitute? Are you as the end client? Are you responsible for paying that substitute, or is it the person who is the contractor? In normal practice, it would be the contractor who is responsible and who should be responsible for paying the substitute in the circumstances. Other point as well, they ask about workers' helpers in this section. So that is somebody who is an employee essentially of the worker, and in those circumstances that's different from a substitute. They're usually somebody who is potentially helping them with admin or something like that as well. So, and that's more of that's more of an indicator of them having a status outside of IR35 if they are almost running their own business alongside this as well, rather than completely on their own. Another point as well is control. So who has control over how, when and where the work is carried out? If that's the hirer, then that is indicative of employment status and falling within IR35. I'm actually, shortly after this, I'm assisting a worker who is disputing their IR35 status, and one of the points in there is that the contract says that the hirer or the end user has no control over the way in which the work is carried out. But when they've conducted the CEST test, they've marked it that they do have control over that, because again, the contract doesn't reflect what happens in practice. So we're going to have some interesting discussions about that after this. It never rains but it pours with IR35. It seems to be one of the main things that I'm doing at the moment. Another point to look at is financial risk. So CEST addresses the level of financial risk by understanding the costs that a worker might face in order to undertake the work for which they won't be directly reimbursed. So in HMRC's view, for costs to be considered when assessing employment status, they must be significant and incurred as a requirement of the contract. So where costs are significant, that will depend on the value of that contract as well. But if you're choosing to incur costs through personal preference, that's not necessarily relevant. So things like everyday items, and for personal use, for both work and personal use, like laptops and tablets and things like that, that's not indicative of financial risk. But also a worker could incur a financial risk if they put right faulty work. That's one of the questions. Are you at your own expense? Is the worker or the contractor required to put right any work that isn't to the satisfaction of the hirer? And again, that's indicative of falling outside of IR35 if they are. If you are paid an additional day rates for faulty work, again, that's indicative that they have the status inside of IR35. So you can kind of see it all coming together, I guess. Another one I mentioned about benefits as well. These aren't, if there are any additional benefits, I mentioned that before, distinguish those from any statutory benefits that they might have in the circumstances. So just moving on again, a few more key CEST questions. A really interesting one that I was quite surprised about when I first looked at the CEST test was how they introduce themselves. So when a worker is going to see one of your customers or suppliers, how do they present themselves? Do they introduce themselves as being a independent contractor working with you, or do they introduce themselves as just working with you? You know, something as minor as it might appear of that is an indicator of employment status. You know, what will a reasonable consumer or supplier think when they're meeting this person? Will they think, oh, right, this is an independent contractor, or this is somebody who works for my organisation? An interesting one, really. Another one is restrictions in contracts. Is there any restraint of trade clauses in there? So does the contract prevent or restrict a worker from doing similar work for other hirers? If that's a yes, then again, that's going to be indicative of falling within IR35. They should really have the freedom to go and work for other businesses, other organisations by the time whilst they're working for you in those circumstances. But I understand that in practice that rarely happens. I've just had a note on chat from Yanis just asking if we'll get the slides after the session. Yes, you will. We'll send these through. We've also got some fact sheets as well that we've pulled together with some of the information that you might need in there as well. So you'll get some good takeaways afterwards. So don't feel that you need to take copious notes as you're going through all of this. I know that there's a lot of information within there. So just jumping back to the slides, another point is other work. So this is vital. Does the worker work elsewhere? Do they need information? And this kind of links to the restrictions point as well. And then again, the question is asked about concurrent contracts as well. Have they had a previous contract with you? Do they have another contract with you that runs at the same time? You're working them on 2 different projects, for example, or are there separate contracts that have run concurrently as well? So you need to understand the contractual arrangement. So Simon, moving on to the next slide. I've done another diagram to try and keep you interested. I was going to put some pictures in there, but it's quite hard to find pictures that kind of work with this. So just kind of this reflects Ben's previous diagram, just showing the kind of typical arrangement that you might have with a worker and how they might fit with the end clients. And what we've put there is that you essentially have a hypothetical, you could have this without the agency, I should say as well, but you typically have a hypothetical contract between the worker and the client, the end user, the service customer. And just moving on, Simon, if IR35 does apply, then that hypothetical contract is essentially employment. And as Ben mentioned, PAYE applies, and you have to deduct national insurance from there as well. And so what will happen is that if it is concluded that the worker is deemed to fall inside IR35, then it's not up to the individual or the intermediary to pay the PAYE and NI. It's the service customer or the agency that has to pay that. And I've been working with a lot of agencies or umbrella companies about how that might work. So the changes do obviously force that assessment onto the service customer, but it is the end user, but it is either the agency or the service customer that will have to be responsible for deducting the PAYE and national insurance. And in those circumstances we're seeing, and John will talk about this as well, if they do fall within IR35, you're looking at situations where there is renegotiation of contracts, because obviously the value will be quite different if you're deducting national insurance and PAYE from that. So if we just move on again, so I actually took that slide out in the latest version, Simon. So if you just jump on to the next one as well, and then we'll go back to that one afterwards. So I think actually, sorry, I've changed my order in mind. Just jump back again a couple. So testing employment status. So if a worker does fall within IR35, it is advisable to consider whether or not, in reality, they should be an employee. And I will move on to the slide in a minute where I kind of discuss that a bit further. And I just wanted to take you through what an employee is defined as, the statutory definition under the Employment Rights Act. And it is an individual who has entered into or works under a contract of employment, and the contract of employment is a contract of service or apprenticeship, whether express or implied, and if it's express, whether oral or in writing. So not particularly clear in the circumstances. But I mean, the question of whether an individual is an employee is not an easy one to answer. The cases regarding employment status go back many years, and it does really remain impossible to set down a clear set of defining criteria of which you can set against an individual's status. So there's been a significant, I'm sure you've all heard it, a significant amount of criticism of the statutory definition of employment in recent times, notably that it's not clear and it's not appropriate for the newer models of working that we see with, you know, the gig economy and workers and all this kind of stuff as well. But it is important to note that the CESS test does align with a test for employment status. So if you get a positive determination that they fall within IR35, then you should be considering whether or not actually they are better placed as an employee, and we would suggest that you take legal advice from someone like me on something like that. So if we just move on, Simon, to the next one, it's a bit of a tombola. I'll see which slide I've got next. So if you do, so as I just mentioned, if they are, if you do think that if they do fall within IR35, are they an employee is the first question that you need to think about. But key, do you want them to be an employee? Do you want to engage them in this way? And also, do they want to be an employee? Do they want to have that kind of more permanent relationship with you in that way? Also, there are the financial implications of that Ben's going to take you through in a few minutes, when he's just going to take you through kind of what that looks like in a different way. But also, if you don't want them as an employee and they don't want to be employed, what is it that you're going to do? Are you going to continue the relationship as it is, or are you going to say, right, okay, we'll apply the off payroll rules and we'll continue in the same way, but obviously the pay will be different in that sense. So Simon, just on to the next slide. So this kind of links then with what to do with the CESS determination. So you can accept IR35 and apply PAYE and NIC. You could also introduce the agency as a fee payer. We're seeing a lot of organisations almost having a blanket policy of saying, well, actually, we are introducing an umbrella agency. They're going to be the fee payer on this, and this is how we're going to run all of our IR35 contracts. You could look at amending your terms for the PSCs as well, changing the way in which you work with them going forward to try and get them to fall outside of that process. But again, make sure your contract reflects what happens on the ground. Or as we say, just employ people. Look at a package for those people to keep them and to retain them and engage them in that way. But you would have to be quite cautious and negotiate with the individual about what that package will look like. So I think we're on to Ben now to talk about the status determination statements, which kind of follows on from mine.
Right, can I have the next slide, please, Simon? Right. So, we need to look at, assuming that you're going to continue on contracting the personal service company and they're inside IR35, your next step is to issue a status determination statement to the personal service company, and this will and this is where they're providing the personal services after the 6th of April 2021. Sorry, there's a slight typo on that slide there. It is April 2021, and the status determination statement must be issued to both the personal service company or the agency and the individual worker directly. So a status determination statement must have two things on it. It must declare the personal service company's deemed employment status following an IR35 assessment and reaching this conclusion. Now, there isn't a time limit for issuing the status determination statement, but I'll go on later to explain that it is better to do it sooner rather than later. And what the Revenue has said is that you can't just issue a blanket policy decision. You must look at each case separately to determine the employment status, and that's quite important. So if you can go to the next slide, please, Simon. So again, here we've got an example of a typical IR35 engagement, and like Amy said, we don't need to have an agency, but quite often there is an agency in between the end client and the personal service company. So as the end client, you would issue a status determination statement to the worker, and if there is an agency involved, you'd pass it effectively down to the next person in the chain, be that an agency, an intermediary, or a personal service company. We can even have a position where you've got multiple companies in between the end client and the personal service company, for example, if it's an overseas worker or something like that. So it effectively, you're just passing the status determination statement down to the next person in that chain. Like I said, there is no time limit for the issue of the status determination statement, but until that statement is issued, the liability for pay-as-you-earn and national insurance lies with the end client. So the sooner you can get that status determination statement issued, the sooner the liability passes down the chain. Obviously, the liability, once the liability count, the status determination statement doesn't pass down to the personal service company, because the liability will always be the person behind that, person who's paying the actual personal service company. Where the agency or fee payer resident overseas, the liability to deduct tax lies with the last UK resident entity in the chain before the personal service company. So if you have got an overseas agency, the liability to deduct lies with the last UK resident entity in that chain. And the frightening part comes that if the revenue is unable to collect the tax due from the agency or the fee payer in the above example, they will travel up the chain to collect the tax. So you do need to be careful when you're contracting agencies that you've issued the statement and that you can show that you've done everything you need to do in that step. And if another thing as well, if the end client ceases to be medium or large, then it must withdraw the status determination statement before the start of the next tax year. So that's if your turnover reduces or your balance sheet assets reduce, etc. You need to notify your personal service companies and the workers that you're operating as subcontractors that you no longer meet the criteria to be within the off-payroll working rules. Payments made, if you do go from being large to small, then payments made after the start of the next tax year will not be under the deduction of pay-as-you-earn, even for work that's done after the start of the year. Can I have the next slide, please, Simon? So quite often what you will find is that where you issue a status determination statement, you might not actually know all the details about the subcontractor. As an end client, if they are a genuine subcontractor and aren't really a deemed employee, they might have other clients, they might have offices. You might not really know much about the subcontractor. So you may, in good faith, issue a status determination statement, say that you think they're a deemed employee, but there might be circumstances that you don't know about that will change that decision. So there is a disagreement process that's been introduced if the worker doesn't agree with the end client's decision, and if they disagree with that process, then the end client will have 45 days to review the decision and either change it or provide the worker with confirmation of their original decision and their decision for coming to that conclusion and why they think it's correct. And while it sounds like that's a process with a lot of clout, it isn't really. You can't arbitrate it. If there's a disagreement, the only real process the worker can actually do is use the standard self-assessment and NIC reclaim process on the tax return. The result of that is more than likely that the revenue will open an inquiry and it will be a red flag for the revenue. But the end worker doesn't really have much they can do about this. It's basically the decision of the end client, because that's who the liability lies with. So if you can have the next slide, please, Simon. So as Amy pointed to earlier, you have a decision as to whether you keep them on as a deemed employee under IR35 or whether to take them on as an employee. And there is a difference. A deemed employee and employee are not the same thing, and they don't have the same rights, and you don't have the same obligations as an end client. So first thing is you need to pay them, if they are a deemed employee, you need to put all the payments through the payroll, and it needs to be submitted to the revenue under the normal real-time information scheme. And you'd put them on your payroll software. As a deemed employee, you're not entitled to holiday pay, statutory sick pay, maternity pay, paternity pay, etc. And you don't have any employment rights, or you don't have the same employment rights, should I say. You also don't have to pay them an auto-enrolment pension. You don't have to pay them student loan, deduct student loan deductions. But they do, if you do make payments to the apprenticeship levy scheme, then they do qualify under the apprenticeship levy scheme, and it will affect your construction industry training board disclosures if you're within that scheme. And I think you can make those. I think there was a determination against Uber very recently, and their workers, they're actually going to put them make pension contributions for their workers as well. So that's quite interesting. But there's no liability to do so, certainly for the auto enrolment pension or the holiday pay, etc. So we have the next slide, please, Sam. Now, the most important thing is the risks of non-compliance. The responsibility for deducting tax from the payments to the personal service companies, if they're deemed inside Ir35, lies with the end client. And more importantly, it's not that the payments that are made over to the personal service company are deemed to be the net payments after the deduction of tax and national insurance. So what you'd effectively have to do is gross up those payments. So if you paid a subcontractor £100,000 a year, the grossing up those payments would take that liability an addition. Well, it would give you an additional liability of about 70,000 in tax and national insurance, and an additional 22,000 in employers' national insurance once you've grossed those payments up. So you've got to consider that these liabilities can get very quick, very large, very quickly. And it's unlikely, because of the current workload of the revenue, that these cases are going to get picked up in the next 12 months. They usually will get picked up over 2-3 years further down the line. So as you can imagine, if you're engaging a lot of subcontractors, it can be very expensive if you're not compliant with the rules. You'll also be, as I said, liable for the employer's national insurance and the apprenticeship levy, and you're liable for any outstanding tax if HMRC successfully challenges the decision. And you also need to consider penalties and interest, which again, penalties can be up to 100% of the tax if it's been done deliberately and you've not disclosed things correctly. So it really is something you need to do take very seriously, and get some professional advice before you make your decisions, because it's a very complicated decision. It's very difficult to manage, and more importantly as well, if the company can't afford to pay or becomes insolvent, they can actually transfer that liability to the directors in certain circumstances. So it's something you do need to consider very, very carefully. One thing I would note is that in the first year, penalties will only be charged if there's evidence of deliberate non-compliance. So this gives everyone involved time to tweak the processes as the rules bed in, without the worry of expensive penalties if you make an innocent mistake. And the Revenue have also confirmed that if you do things correctly going forward, they're not going to look into the years prior to the April 21 because of the implementation of these rules. And that's effectively just to try and incentivize people to change the determination for some of the subcontractors if that's required. And whilst it's not a cast iron guarantee from the Revenue, it should give you a bit of comfort that using the rules correctly going forward shouldn't cause any problems for earlier years, unless there's something particularly done deliberately and fraudulently. So at this point, I'd like to hand over to John, who's going to go through some of the contract implications.
Yeah, thank you very much, Ben. Good morning, everyone. My name is John Pickervance. I'm a partner at Forbes Solicitors and head of the commercial department. So where I tend to become involved in IR35 matters is in connection with the contract itself. So as Amy has mentioned, the first step will always be doing the CES determination. But then once you've done that, you want to make sure you've got an adequate contract in place. So before we look at some of the specifics of what the contract might say and some of the things that you can do with the contract that's been well drafted for you, is actually look at some contract law fundamentals. It's always worth taking a step back with any sort of contractual matter to make sure that you fully understand when a contract is formed, and which terms and conditions also may apply to the contract itself. So first of all, we see here the 4 criteria for the formation of a contract. What you will notice from this list here is that there is no reference to anything having to be in writing for there to be a valid contract. And also there's no requirement for anything to be signed either. So, you know, be aware and be vigilant that you can enter a contract with a PSC in a verbal manner. So first of all, we've got offer and acceptance, which go hand in hand, consideration, and finally an intention to create legal relations. So put plainly, an offer may be the proposal which is issued to you by the PSC, assuming obviously that you're the end client in this case. The proposal is issued subject to their standard terms and conditions to supply services X, Y, and Z. Your acceptance may come in the form of verbal acceptance. It may be an email by return saying, yes, thank you very much, or it may be a purchase order, for example. The consideration in the case of forming a contract is effectively what is changing hands for the performance of the services, money being the most obvious one, or maybe there's a contra performance of services or provision of goods. And finally, there must be intent on the part of the parties to enter into a contract. So it's not just speculative negotiation or discussion, for example. Okay, next slide, please, Simon. Another very, very important contract law principle to take into account prior to a contract being formed is battle of the forms. Now, what this does is it dictates which set of terms and conditions or whose set of terms and conditions will actually apply to the contract itself. So to take you back to the example that we just ran through there, if a PSC issues you with their proposal subject to their standard terms and conditions, then that is their offer. If you unequivocally accept that, that's your acceptance. Very simple, contract formed. If, however, you issue a purchase order document and that is issued subject to your standard terms and conditions of purchase, for example, then that is not an acceptance anymore. That is instead a counter offer. And the contract at that stage would only then be formed if the PSC then either unequivocally accepts the counteroffer or they impliedly accept it via commencement of the performance. So what this does is it just highlights the importance of firing the last shot, and that's where the battle of the forms comes in. So if you fire your terms and conditions across the table last, then you will be the party which has their terms and conditions form the basis of the contract. So next, please, Simon. And then we have subject to contract. So this ties in with point 4 on the formation of contract criteria, the intention to create legal relations. If you are in bona fide negotiations and you don't want those negotiations to form a contract until such time as somebody has prepared a formal contract or something's been signed, no matter how detailed or informal it may be, then make sure you mark your correspondence subject to contract. So subject to contract may be in the subject line of the email, or the acronym STC is equally as effective and recognized as meaning subject to contract. Equally, if you're in a discussion, in a meeting that perhaps doesn't have anything written, follow up with some minutes, or just make it clear at the start of the meeting that it is a subject to contract discussion. So just a few important principles there. Yep, next please, thank you. Okay, so as we're all aware, PSCs are a form of supplier, and therefore we're looking at a supplier contract predominantly here. Obviously, again, speaking from the perspective of the end client or the employing company. So what we say is that one size doesn't necessarily fit all. I mentioned there a few times about raising purchase orders that are issued subject to your standard terms. It's not necessarily the case that a traditional supply of goods or services would be reflective of those being offered through a PSC. And therefore we say just be hesitant when it comes to raising your purchase order or issuing your standard terms in whichever manner you choose, because they may not refer maybe to the specific individual within the PSC that you're looking to provide the services. Obviously, as we all know and have discussed, the nature of the PSC is that it veils a specific individual that you actually are interested in dealing with. So make sure that your document has adequate references to the individual as well as the supplier. And the basis for that is that you may want to actually tie that individual to certain of the obligations personally, or maybe separately via a side letter, you may want to have a guarantee of those obligations. One of the fundamentals for that is because often the PSC is a newco, which doesn't necessarily have any assets outside of the brain power of the individual themselves. So therefore, if you were to sue the supplier for whatever reason for non-conformance with the contract, there may not be that level of asset there backing you up should you need to recover liabilities. So if we can go to the next slide, please. We'll look now at some of the important terms that you can implement within this PSC agreement, or some of the things that you can look to modify and work in your favour moving forward. So the first one, and very, very simply, is the parties. Do you know who the contract party is? What is the identity of the company that you're dealing with? Do you know the precise company number and not just the company name? So obviously the company name can be changed from time to time through Companies House. So the company number, really, really important. And also, as we said on the previous slide, do you want to add the individual as a contract party themselves as well? This is a fundamental importance because when it comes to enforcing the contract, you may not have the correct entity on there to do so. In terms of the performance obligations, first of all, let's have a look at timescales. Referring back to the CES test that Amy ran you through earlier, avoid there being too much control over maybe when the PSC performs the services, but note that you can include a lot of control over when the services are performed by. So you may have a deadline, you may have milestones, you may have stages that need to be completed, all absolutely fine. However, if you're dictating that that PSC must provide those services 9 to 5, Monday to Friday, for example, then you're likely to be straying the wrong side of the line. Looking at the level of obligation, obviously the most robust form of obligation to tie the PSC to is an absolute one. So PSC Limited shall perform. If the contract is negotiated, then you may often see something less. So for example, PSC Limited shall use its reasonable endeavours. We want to avoid reasonable endeavours as the recipient of the services because it doesn't place too much onus on the supplier in this case to do everything it needs to secure performance. So short of absolutes, but better than reasonable endeavours, we might impose best endeavours on the PSC. And again, Amy mentioned earlier the right to substitution. It's good to have that in there if you are dealing with them outside of remit, but do make sure that that's not just paying lip service and that it enables you to effectively deny access to a substitute in any circumstances. It's not necessarily just black and white, so i.e. you can appoint a substitute or we can just decide as and when. You can make it conditional. So this is where the right of substitution clause can actually work for you, because you may say, okay, you can substitute and we can also deny, but only if the substitute that you're putting forward doesn't have the requisite level of qualifications or experience, or for example, is at least as qualified and or experienced as you, the individual, are. So that's what you can do with that clause. Next, please, Simon. So charges and payment. I'll not run you through every single point on this slide, but it's pretty self-explanatory, really. Make sure that the contract is very clear as to how much is being paid, when it's being paid. Does it refer to a performance requirement rather than maybe with your employees who are paid on a set date of the month? But importantly, focus on this right of set off, or maybe even a right of net off, as we might call it. Referring to what Ben said there, if somebody does fall inside of scope and you need to then gross up effectively all the payments that you're making as a business, if you've got an adequate indemnity clause in there or set off clause, then what you might be able to do is reduce the net amount that you actually pay to that PSC to make sure that the overall package that's leaving your business is the same. That may be triggered by a renegotiation clause, so i.e. you're bringing their net payment down, and it's also likely to be an unfair contract term clause if you don't allow them to get out of the contract in that case. But these are all important considerations for you're acting in one way now, but if you make a determination at some stage in the future, what can your contract actually do for you to make sure that it's flexible enough? Next, please. So intellectual property rights. PSCs may be consultants who are specialists in certain fields. You get them in because they are experts in their fields, and perhaps they're making certain new developments for you. Maybe they're creating new products. Maybe they are doing some design work for you, all of the above. This is really important because they are, as a supplier, likely to be creating some form of intellectual property in what they do. And as I'm sure you're aware, as the old saying goes, 80% of the value in your business is intellectual property. So do you actually own it? So when it comes to that sale, can you actually say, yes, we own this piece of intellectual property? If your contract doesn't say anything about intellectual property, or if you don't have a contract at all, then the default position will be that this PSC will own the intellectual property which they create, even if it's created solely for your business as an end client. Intellectual property is one of the few things at law that have to be subject to a written agreement in order to transfer from one party to another. So make sure you've got a really good assignment clause in there that transfers you that intellectual property. Also think about the assurances that you need from the PSC. You are effectively relying upon their expertise. They are creating IPRs for you. You probably want some level of warranties from that PSC that those intellectual property rights don't breach those of a third party. And if they do, let's make sure we've got an indemnity to back you up to recover those liabilities in that case. Next, please, Simon. And that ties very nicely into liability and indemnity. So you may see these two topics form part of the same clause. You may see separate clauses relating to limitation of liability and indemnity. But in running you through the next two slides, I will assume that, again, you are the end client here. So certain things are illegal to be excluded and or limited at law. And those are personal injury, death, fraud, fraudulent misrepresentation, and other minor things dependent on the nature of the contract. But those are the main things there. So no matter what happens and no matter what the contract says, you cannot exclude your liability for those things. So you know that you will always be able to recover any liabilities that you suffer in those brackets from the PSC, or maybe it's the agency if you're dealing with them as an intermediary. We then look at the types of losses. So these can be categorized broadly, first of all, as either direct losses on the one hand, And then on the other hand, indirect, consequential and special losses. So we can exclude our liability for indirect, consequential and special losses, whatever they may be. And on the flip side, we want to make sure that the PSC isn't limiting or excluding their liability for any of those things. We can also exclude liability for direct losses that are any of the next 4 bullet points effectively. So from loss of profits down. We cannot completely exclude direct losses from our liability. And what direct losses are effectively those which were reasonably foreseeable by the parties at the time the contract was entered into, or would be in the reasonable contemplation of the parties if a certain clause wasn't adhered to. So what we can do is exclude everything from the second bullet point down there. And for direct losses, we can exclude everything from loss of profit down, but leaving only certain direct losses that we can then limit our liability for. And we then set a financial cap. So we know entering into a contract, if something goes wrong, subject to the illegal exclusions, we will only be liable up to a certain amount. So this is quite heavy, I appreciate, but just be aware that this is the sort of thing that you can do with a well-drafted contract and want to look out for to make sure that the PSC doesn't go too far. Okay. And we specify the ways in which those losses can arise. So losses in law can arise in contracts, they can arise in tort, which may be negligence, for example, or they can arise in statute. So we always make sure that these clauses refer to all of these things in order that you can recover losses under those different categories. So that's you as the end client excluding your liability, but then if we look at recovering your liability, because as the recipient of the services, you're much more likely to want to recover losses than you are to exclude or limit them. And the best way to do this is via an indemnity. So if you've got an indemnity in your contract, what it will state is that if the PSC breaches clause X or any clause in the contract, and we suffer a liability because of that, then on demand, the PSC shall pay on a pound-for-pound basis those losses. What that benefits you in doing is avoiding the step that you would have to go through without an indemnity. So without an indemnity in the contract and going through litigation, you would first of all have to prove that there's a breach. Second of all, you'd have to prove that you've suffered loss. And thirdly, you would then have to prove the breach caused that loss. And the benefit of the indemnity is that you don't have to prove a causal link between the loss and the breach. So really, really powerful clause to have in your contract. Okay. Yeah, and I believe that brings an end to my section. So hopefully that gives you a bit of a food for thought on those contracts and the benefits that you can employ for your business in making sure that they're well drafted. So I'll pass back to Amy now, who'll just wrap up. And then we'll have a bit of time for questions. Thank you.
Thanks, John. So I just kind of wanted to run through some of the issues and risks with this whole with IR35 and kind of what you need to do next. So in terms of the issues, you need to be looking at undertaking some kind of due diligence on your PSC population. If you're a larger organization, it can be hard to track everything if you've got different teams and different departments that are potentially using PSCs. You know, look at the contracts managers, make sure that everybody is aware of what's happening and look at those PSCs and look at the contracts, as John said, that you have in place. There is this requirement to make the determination for all PSCs if you are the end client. So make sure that you have the expertise and the resources for doing that and for dealing with these changes. If you've not already started doing that, you need to be doing that right away. Also think about how you're going to make the determination and what you're going to do if there is some kind of incorrect determination that is made. That's a real concern that would take place. If you've got a contracts manager who's just looking at the contracts doing these determination, you need the feed in from different teams who work with the individual, not just getting, say, HR to do this or the contracts manager. Make sure that you are putting yourself in the right position to be making the best position for making the correct determination as to their status. And then also thinking about what will you do if you get the determination that they fall within IR35. Are you going to think about employing directly, or are you going to continue to engage through a PSC? That's an issue and a consideration. Think about umbrella companies. There are a number of these that are coming up at the moment that can act as the agency and the fee payer. Are you going to have a strategy in place for doing that? And as I think Ben and John have outlined through this, the risks really, obviously there's increased potential costs here where there is that determination that they're inside and you've got to apply off payroll. Also expect pushback from workers who are protective of their outside of IR35 status. As I mentioned, I've been engaged by some of them to help them with disputing their status and these kind of appeal processes that Ben went through as well. I would really say it's vital to have consultation with I know you don't need to, but it is vital to have consultation with the consultant, with the contractor as you're going through this process. Also, another risk is loss of key talent. If you have somebody who's working in this way and they are a great asset to the organization, you could potentially lose them if they think, well, I'm not going to continue to work with you if you're going to apply it in this way. I'm going to go and look at other options. So think about your strategy for that as well. And then, as John mentioned, potential for delay of projects as well, if things are on hold while you try and resolve this. And then there is a challenge of attracting new talent. So Simon, just on to the next one. But it also represents some opportunities. Everybody's in the same position with this now, because previously it was just the public sector. Now we're in private sector as well. We're all in the same position. So it's an opportunity to think differently about how you engage these PSCs. Thinking about future-proofing your organisation. We are seeing this rising trend of contingent workers. So think about your contractual terms and think about how you work with them to make it work for your organisation, so you can keep these arrangements, but just in a different way. You want to be at the fore. If you're wanting to retain the talent, if you're wanting to attract and retain those individuals that are working well with your organisation, think about your strategy and think about how you can continue to work with these type of workers. And that kind of fits with gain competitive advantage through continued access to talent as well. And look at the structure of your workforce. Are there some of these people that really should be an employee? And actually you get that security then if they're an employee, that security of contract. They're tied into longer notice periods. It's much more, some people are actually afraid of employing people in this way because they think, well, actually, no, I want that flexibility. But actually, when you look at the structure and you look at the way in which they're working, it is actually better to look at employing them. I had one client who had a marketing agent, and she'd worked with them for about 5 years, and they were her only client. And they said, well, actually, we've been wanting to employ her for a significant amount of time. They made an offer to her. She was happy with the terms, and now they've got her and they've secured her for a longer period of time. So think about how you're going to structure your workforce, and think about profit optimization and budget delivery as well, and the impacts that it might have on that, and make sure that that's properly planned for. And then we talked about IR35 risk mitigation as well. This is something that's been in place for a long period of time. It's just shifted the determination. And so actually, in terms of you are mitigating your risk for any HMRC investigations. One of the things that we always say is that if you've got made this determination, hold a file on each of these people. And that kind of takes me on to the next slide, which is the how to prepare. So pull together your test and have a project for current PSCs. Carefully heavily consider the contractual position and reflect this in practice. So speak to someone like John to look at your contracts to ensure that they're up to date, to look at all these things, these additional points that John mentioned that you might not have in your contract that could protect the organisation further in this way. And as I mentioned just before, have a file for every worker ready for HMRC and for an inspection by them or the agency with all of this information in there. Then if you have an investigation, you are prepared for it. So prepare now, and then in the future it should be much more straightforward if this takes place. Think about training for your contractor managers if you've not already put that in place. If it's a larger project, who's going to do it? Do they have the adequate skills? I had somebody, one of the questions is the worker an officer? And they misunderstood that, thinking, do they have their own office? You know, something as basic as that. They didn't have the proper training to understand what the CES questions actually meant. Think about clear recruitment process for contractors as well. And then, as we mentioned, a continuous review of status. This isn't just a one-time thing. If you are engaging these people for a long period of time, you need to set in review periods. Are you going to do it every 6 months? Are you going to do it on renewal of every contract? You need to ensure that the contracts managers know what kind of situations would compel you to carry out a further CES test as well. And just before I move on to questions, I had put this as in a slide, but I don't think it's going to be in there now. But I found a really interesting quote actually from Theodore Roosevelt that said, in any moment of decision, the best thing you can do is the right thing. The next best thing is the wrong thing. And the worst thing that you can do is nothing. And so that was kind of how I wanted to finish on this today. But we do have some time for questions now. We've got about 10 minutes. So if anybody wants to pop a question in chat or wants to raise their hand, then we have some time to take questions. And users, we are here to help. I think we've got Tracy Taylor just raising her hand there. Tracy, do you want to?
Yes, please. Just a quick question, really. We are plumbers and electricians, so the guys that work for us on the subcontract side just work, you know, are a one-person band type thing. We pay them an hourly rate, and obviously we deduct the tax under the CIS at the moment. So under this new rule, all of those are going to have to go onto the IR35, aren't they?
Without looking at the contract, it's difficult to say, but if they did go under IR35, you wouldn't need to deal with the CIS system.
Right.
But it does depend. Like I say, it's not you can't make a blanket decision. It depends really on the contract and the intricacies of that contract as to whether they fall within.
Gone up to the day rate ones now, where they are doing the day, what we've just discussed about the day rate, and they're getting a day rate price. And if they have to go back to the job because if they do something faulty, it's in their own time, and we don't pay them extra. So then that wouldn't fall in the IR35, would it?
It sounds like there's financial risk on the side of the subcontractor, because if they make a mistake, they've got to pay for it out of their own time. And
you would have to run the CES test, though. You know, there's so many.
The majority of them, they just, all they do is it's an hourly rate. They're just a one-man band, and obviously we take the 20% tax off them. That's what we've always done with the CIS. You know, so that is the majority of, say if we've got 8 on that way, and then obviously we have the PAYE side.
The best way, as Amy says, is to deal with it, to look on the CES test on the revenue website. Right. More importantly, you need to print that off and keep that for your records and keep that in a file for each subcontractor. Right. And you will need to do that for each subcontractor, because you need to look at each one separately. Okay. And it may be that some subcontractors do work for other businesses. So it really is a case that you've got to look at every subcontractor separately. And as Amy says, you need to look at the CES test and complete that. Yeah. And more importantly, you need to keep that on your file and keep a record of that, because the revenue have said if you complete it correctly, and as long as you put the information as it stands, they will stand by that result from the CES test.
Right, okay, thank you.
It's quite prevalent as well in the construction industry as well, because many tradesmen in the same sort of model as your business there, Tracy, you know, they might be given a shirt or a jacket or something like that with your logo emblazoned on it. So that's quite an important factor. And also they're provided with tooling and things like that. So these are all things that fall within that CES test. And that actually ties in as well with the question that we've just had on the chat. I think that probably answers your question there, Nadine, but also Stacey's mentioned what sort of works fall outside and fall inside of IR35. I don't think it's necessarily the types of works themselves, but the manner in which those works are carried out and the arrangement, as Amy and Ben have mentioned there with the CEST.
Yeah, I mean, some of the common ones are obviously the construction industry scheme, but you've also got IT contractors, marketing contractors, management consultants. It can apply to anything really, anything where there's effectively working through that, you're invoicing them directly through the personal service company or through an agency.
We've had another question from Gavin Comer. When carrying out the medium to large enterprise test, do we include the full corporate group, even if the majority of the group is non-UK?
Yeah, it is the full corporate group that you look at realistically. You first start with a company that's engaging the personal service company, and then you would look if that doesn't meet the medium or large test. If it's a small company, you would then look at the parent company, and then you would look at the group as a whole. So yeah, you would look at the group as a whole, even if they are outside the UK.
I think we're running a little short on time. Just quickly, Gina, you raised your hand.
Hi, yeah. Might be a bit complicated, this one, but it's just regarding the fee pay and the end user. So as a business, if we are appointed principal contractor to complete construction works for a client, now we understand that we need to do the status determinations because the contractors are working for ourselves. But would in that situation you also expect the end client, as in the client who's requested and owns the site that we're building on, to do determinations as well, or is it purely down to ourselves to do that?
It would be purely down to yourselves to do that, because the end client is engaging yourselves as a company, and they're not engaging the subcontractors directly. It's effectively they're engaging you as a business to provide a service. The service that you're providing to that business isn't really a personal service. They're not concerned with who and when turns up to do the job. They just want that job finishing, I would assume.
Yeah. And is that because we're classed as principal contractor, or is it purely due to the relationship?
No, so they would effectively look at the relationship they've engaged you to do and say, have they engaged you for your personal service? And the result is they would look at the CEST test effectively for yourselves. Are they engaging your personal service, or are they engaging you to provide a service? And that's effectively, they would look at it and say, well, no, we're just engaging you to provide as a principal contractor, and it's you that then engages those subcontractors to deal with that job.
Thank you, because we've got other clients who we've probably got embedded people, like a designer who's embedded within their business. So a client in that situation is also carrying out the determination because they see themselves as the end user. But us as a business, we're also completing the determinations because we see ourselves as the fee payer. Sorry, I know it's complicated.
Yeah. So sorry. Is the person who's engaging yourselves? Do you provide them with people to work directly in their business, or embed them directly within their business?
Yeah, so we're engaging with a limited company, but that limited company never really comes into any of our premises. They're purely embedded within a client organisation. I mean, they've got the choice of where they work and what times they work, but they're purely day-to-day. How they get their work and where they work is purely with the client. And that's why they see themselves as the end user.
So for that particular service, then yes, they would have to do the CEST test themselves. But is that person employed by you, or are they a subcontractor of yours? So if
they're one of our limited companies, yeah.
Yeah, so they would probably still need to do the CEST test, and they may issue a status determination statement. But the fact that you're employing them and subjecting their income to pay as you earn, they're an employee of yours, not a subcontractor. the rules wouldn't apply to them anyway because of that particular issue. But yes, in that as a case, they would have to do a assess test on that particular person.
Great, thank you. Can I ask one last question? I know we're really short on time, so I do apologise. Am I right in thinking we should avoid putting manager in any titles for our limited companies? Should we maybe use consultant or lead rather than manager?
I would ensure that it's clear in job titles that they are a contractor, an independent contractor, rather than, or a consultant or something along those lines, rather than, if you say something like manager, you think about how a reasonable person would perceive them if they externally. So it would be sensible. It's not a key determination, it's just part of the determination, but it would be wise to be clear about what their role is within the organisation.
Yeah, so engineering consultant rather than engineering manager.
It all helps.
Thank you.
We've had plenty of other questions on the chat. I think we're running a little short on time, so I'll save those now and we'll take those offline, as they say. I think that's back to you, Simon.
Yeah, brilliant. Thank you for handling that, Amy. Thank you, Ben. Thank you, Amy. Thank you to John. Any questions that we haven't managed to pick up in the chat, as Amy's just said, well, we won't, I won't, but the experts will respond to them. I would not have a clue. Even now, I feel more informed now than I was. And actually, I think there's some takeaways for some of our arrangements for how we engage consultants at the Chamber. So this webinar will be being circulated internally around the Chamber, I think. We will be publishing the event on YouTube afterwards, so if you do feel like you need to watch again, you can do. We'll circulate the slides, everyone's contact details, all the speakers' contact details, that is, and some useful handouts as well in the follow-up in the post-event email. So thanks very much for your attention. Thank you again to Amy, to Ben and to John for their expertise this morning. Thanks for all your questions. Do check chamberlive.co.uk for all our upcoming events, and enjoy Wednesday afternoon. Thanks everyone. Thanks for watching this Chamber Live video from the East Lancashire Chamber of Commerce. If you've enjoyed this content, then you might enjoy some of the other content that's on the screen now. Please do subscribe to our YouTube channel.